Hi guys, welcome to Money by Sunny. In this video, we'll go over 8 different types of unconventional investments and explain how you could get started with them. We're all familiar with traditional investment assets, such as stocks, bonds, and real estate. These have existed for many decades, and there is a wealth of information out there explaining exactly how they work. But what about unconventional investments? These are the type that aren't typically made through banks, though you can do for some of them. Investments that are less conventional and potentially riskier, but could just pay off big time. Do note, however, that this is not financial advice, as this is merely for educational and entertainment purposes. Now, let's get into it. Number 1. Industrial metals. Industrial or base metals such as iron, copper, and aluminum are everywhere. They are used in almost all industries out there, from automotive to aerospace, from mining to maritime, and of course, very widely in construction. If you're looking for a way to invest that will give you the ability to capitalize on one of our least renewable resources, then industrial metals may be your solution. After all, metals are a finite resource, and we are limited only to what can be mined from the Earth's crust. Industrial metals can be bought and sold on the major commodity exchanges, such as the Chicago Mercantile Exchange or the CME. There are also a variety of industrial metal ETFs out there that you can invest in, which are either invested in the metals themselves or in mining companies. Number 2. Precious metals. Precious metals usually refer to silver or gold and can be a great place to start your unconventional investing journey. Over time, it can be a good investment and is considered a safe haven investment, because gold especially tends to hold its value better over time as compared to most other investments that are out there. There are many ways to buy it too, from picking up a couple of grams at a goldsmith or jeweler, to buying bullion in the form of coins or gold bars from gold dealers and mints, to buying gold ETFs from one of the big funds. Of course, buying physical gold or silver has its own additional risks, such as ensuring that you buy genuine items from a reputable dealer to ensuring security of storage. However you obtain it though, precious metals could be an interesting addition to your investment portfolio. Number 3. Rare earth metals. Yet another category of metals. This is the last one, we promise. Investing in rare earth metals is attractive for one simple reason. They are extremely rare, hence the name, and they are needed in almost all of the electronics that facilitate our daily lives. Some examples of rare earth metals are neodymium, gadolinium, and praseodymium. They are commonly used in magnets that power everything from electric cars and wind turbines to MRI scanners, as well as chips that are embedded in our electronic devices. To add to their rarity, only 4 countries produce more than 90% of the world's supply, as of 2020. All this points to a real scarcity value, which is always attractive as an investment. These are not easy to invest in directly, however, and the best way is via buying shares of exploration and mining companies, such as China's Xiamen Tungsten Co. and China Northern Rare Earth Group High Tech Co. There are also a few rare earth ETFs, the most popular of which is the Van Eck Vectors Rare Earth Strategic Metals ETF. Number 4. Bitcoin and cryptocurrencies. Bitcoin and other cryptocurrencies have received a lot of press and a lot of hype in the past few years, and they have revolutionized the way people think about investing their money. Bitcoin especially has been called digital gold, as more and more people consider it as a digital store of value and a hedge against inflation. How do you invest in crypto? Covering all the different methods would probably take a university thesis, so we'll just touch on a couple of basics here. To buy crypto directly, you need to first have a wallet to store it. Online wallets on a crypto exchange are the most common, though offline wallets offer maximum security against hacking and theft. Some of the more popular exchanges to buy and sell crypto are Coinbase, Binance, and Gemini, where you can buy using US dollars or any of the major currencies. In addition to being aware of the different buying and selling fees that these exchanges charge, It's also important to consider the security of the exchange, since they are often a favorite target of hackers. Number 5. Rare or fine art. The art market is not widely known, but is one of the more interesting investment opportunities. Over the past several decades, art has become recognized as a very valuable asset class. Today, many wealthy individuals invest and trade art with the goal of growing their wealth. The idea is simple, because art prices are driven by different factors than other financial assets. They have the potential to grow in value independently. Of course, like all other assets, investing in art starts with research. Is there a specific artist you should be looking at? Are you looking for something you can get for as little as possible? Something that could eventually be worth a lot of money, but may take many years. These are all things to consider when deciding which art market you want to dip your toes into. After that, participating in online auctions with one of the major auction houses is one of the best ways to get started with purchasing your first piece of investment art. Number 6. Collectibles. Many people turn to collectibles to increase their investment portfolios, whether combined with other investment components or as a standalone value creator. There are several different types of collectibles. Some of the most popular and sought after are diamonds and jewels, comics, vintage cars, coins, and sports memorabilia. A popular category among those who invest in collectibles is jewelry. This could be because of their versatility, size, and ease of storage. People can easily handle their jewelry collections at any time and even place them in their home for aesthetic reasons. A safe deposit box at a bank is another option for storage. Typically, investors who choose jewelry are looking for appreciation in value, as well as returns on resale or capital gains over time. Depending on the type of collectible, they are widely available either online or in regular shops. A word of caution though, take extra care to ensure the authenticity of these items, as the market is rife with fakes and counterfeits. But if you're looking to take a unique path while investing or diversifying your portfolio, collectibles could be an interesting addition. Number 7. Wine. Investing in wine is not as exotic as it may seem. Some banks even carry research reports that predict future developments in the wine industry. Though it sounds like a pretty high-end idea as a first-time investor, wine can be an impressive long-term investment. If you're buying bottles of wine directly, storage will definitely be one of your main considerations. Not everyone has a wine cellar in their basement, but a cool, dark place is the minimum requirement for adequate storage. A bedroom cupboard drawer might even do the trick. As an alternative to physical bottles, wine shared portfolios or cooperatives are an interesting option and something the unconventional investor could consider. These give you a chance to get a piece of a winery from around the globe, as opposed to the actual wine itself. Wine shared portfolios and cooperatives provide access to the wine investments for people who want to participate in the market, without actually buying the bottles themselves or maintaining all the services needed for running it. Number 8. Direct or peer-to-peer lending. Direct lending, also known as peer-to-peer lending, is the act of lending money to a borrower without a bank acting as the intermediary. The borrower can be an individual or a business. The lender, which is the investor, can be another individual or business. Peer-to-peer lending is not exactly new, with Prosper Marketplace and Zopa both being established around 2005 in the US and UK respectively. But since the global financial crisis of 2008 opened many eyes to the fact that banks are not impenetrable and should not be assumed to be safe, peer-to-peer lending has been on the rise as an alternative to maximize returns on capital. The key consideration when investing in peer-to-peer lending is the website or platform. It needs to be reputable and have a good track record when it comes to doing the right groundwork in terms of the borrowers and managing credit risk. Once on the platform, you'll find a wide variety of borrowers seeking loans, all with their own unique set of characteristics and risk profiles. Your investment returns will then vary according to which loans you decide to fund. Some of the more popular platforms available globally are Lending Club, On Deck Capital, and Funding Circle. There you have it. I'm sure these 8 unconventional investment ideas will broaden your investment horizon, help to diversify your portfolio, and maximize your returns. If you like this video, please do subscribe and leave us a comment. See you next time on Money by Sunny.